I'd like to welcome you again to our pro session. It's been really interesting last night, and it has been interesting today as well. The market is very, very nervous. Let's have a look at each pair on the hourly chart, which we are focusing at. Let's have a look first at, I just closed down this positions stuff, at euro dollar. On the last two trading days, euro dollar, we had the beginning of the week the low around 122.50. And then that was basically in line with the trend. We went up, correction all the way back to 124.60, 124.40 yesterday. Then the market is moving back down, and now it's in a sideways market. We can see here now the range at around 123.93, 123.96 on the upper side, and the lower side around 123. The low was around 65. And that's where we're going to put the next support line of the current trading session. In other words, we're in a trading range here, hovering between those two lines. And this one is a very strong support line as well. Well, the 123.75, we had that already in the past. Let's move over here. And we can see it here now. The one, there it is, 123.75 was support in the past. It broke and immediately has the next support, 123.60. And now basically that's what we are focusing on, or that's what the market is fighting with these two support levels on the downside. The bears basically have to get them out of the way to make further gains on the downside towards the next really support line, 123.30 level. Whether this is going to happen today, who knows? It's going to be a tough call, because the market is very cautious since yesterday and also since Monday, where we had basically high volatility on the dollar itself, and the risk of issue, in other words, in moving equity around. We had the problems on the equity markets, a little bit of a sell worldwide. So people are a little bit nervous, plus you have profit taking on over already short positions. Remember, we had the COT report. Here we are, where we clearly can see from the highs in November, 178,000 shorts. The market is basically reducing short. It increased a little bit, but since 169,000 18th November, the market is reducing the short position prior to Christmas to book some profits. And it might very well be the case that at the end of the day, we basically end up maybe before Christmas at short 100,000 or even less. So this obviously speaks very much for the euro-dollar bulls. In other words, so the market stabilizes itself on this region. If the market stabilizes itself around 123.60 or above this, it might be very possible that we're gonna see an increase in euro dollar, or after breaking this level and breaking the 124.40, going all the way back up to 125.05 and 125.50. But currently we're not positioned that way. I had a long entry, a long euro entry, short euro dollar entry last night. If you go back on the hourly chart, or yesterday afternoon, this is the level, and basically we came from 123.60 yesterday. No, hang on, that was the wrong one. Excuse me, just check it out. I used this one here. We had a strong way up move, right? And if you take 1, 2, 3, 4, so we have a long one, so it's about 1, 2, 3, here we get 4. Move up, and then the market broke this hourly trend line on the way down, therefore generating a short entry signal. Got confirmed when the next candle was obviously outside this support line, so we went short there. You can see this green line here. And then the market went out. That's our current stop at the moment. And unfortunately, the market did not do the follow through as expected. It went low as 123.60, but stalled out. So now we're in a sideways movement, and now we have to decide whether we're going to take out this position by ourselves. Just 3 lots. How do we look like at the moment at those 3 lots? Have a look. We are -6. Okay, so well, I think we had a very good week, so I still would be tempted to leave it on. What's our overall risk on this position? Just put the cursor on the system and it shows us $75 risk. Basically it's 250 pips. That's $75 risk we're having there. Being up approximately $1,700 in 2 trading days, I do not mind risking $75 for the time being. And we're not going to get full size, like full lots into the market at the moment, for the very simple reason, as I mentioned in the previous session already, in the analysis session, that the market is pretty choppy and the market is insecure where it wants to go, and we have a high probability that the market could surprise us with a move in the other direction. So let's start, and this is basically a general issue. If you had a good day, then do the next trades with small amounts and not bigger amounts. I've done a great day and now I'll have to achieve the same, and there you go, and if I take even bigger amounts I can make twice as much, etc. That kind of psychology just kills you in the market. All right, so once you basically had a good day, the next thing's the same approach as if you had a bad day. Don't trade for a day, or if you want to trade because you believe your setups are there, or your setups are there, then trade smaller. Minimum 70% smaller, okay? Because then if it just goes against you, then the loss is acceptable small. If you made a big profit, so your profits are not basically wiped out the next trading day. Because if you get into big the next trading day, what happens? We have the blow and bust trading approach. In other words, you blow out your account after having this huge profit, because you were on the good move, 400 pips in the last 2 days, for example, in dollar yen, and then you went in today full size and believe the market's going to do the same thing, and the market says, no way, I'm turning around and I just gonna go the other way, and all of a sudden you're basically left with, excuse me English, some egg on your face and basically potentially being broke. Now, so that's the general approach. Now was your dollar, so I think we're gonna wait on the risk management side. I'm not gonna move the stop. I'm gonna move the stop to break even once we are basically below the support line at 123.60, and once we're also below the 50-day moving average, which comes in at 123.60 as well. So double support. If this goes out of the way, then the market's going to go down, and then I'm inclined to basically move the stop loss into more interesting water, so to speak. Now let's look at dollar yen. Dollar yen, we had a good day yesterday. Well, that's a little bit small. Here we are. All right. Now dollar yen with a good trading day, basically. As you recall, it's on the trade history. That's the trade. We were short at 120.78. Our initial stop loss is not here anymore. We moved the stop loss as the market moved in our direction all the way down. We were here short approximately, and then the market moved down, and after the market left this area, the 120 area, and went below the 119.50, remember that one? I said this is a very, very strong support. We have to watch that. I used basically the Fibonacci approach and lagging strong and taking it stronger, being a counter trend. Once you're in it and the market has made a big move, either you take your profit or you move your stop to a certain point. So what I've done was 100 pip lagging, basically, based on a little bit of Fibonacci approach. I explained it yesterday, but in this case I also used as a benchmark also the 100 pips. And roughly speaking, and when the market went bit down below the 119.20 level, I basically moved the stop last time, and we came to 119.17. Market went down as low as 117.80. That's what we have here, and made a rebound and stopped us out very quickly, and that was the result, 1,300, which is okay. Now the same token, what happened next is I got a long entry signal, and obviously because this here on the hourly is basically breaking the counter trend line in a trend direction, breaking it, and here we again have another break in a trend direction. So it's one long signal, Market is not going up though. It's just going up to the 50% Fibonacci level in the hourly chart. Then market is going down, correcting, consolidating again at direction 118 and the next long level. I just traded this long yesterday afternoon, or late afternoon, like what is it, 1500 hours or so European time. That's earlier for you in the morning. And so basically we got long around 119.16, which is still around current levels, and we are down a touch. Market is now at 119.02, and our stop is hanging around 118.55, basically below current daily, because today's lows. You can see these lows here, and so we just wait. You know, I argued in the pre-session, which we just had, that if we get taken out at that kind of level, then obviously if the 118.55 gets taken out, I would presume the market's gonna test again yesterday's lows around 117.80, and once broken, then we're gonna see a deeper correction, and we just discussed that obviously in our previous sessions here. Then we're going to get a deeper correction, dollar yen, all the way back down, maybe to 117.20 and 115. But for the current time being, the market is just hovering sideways, so we have to see how it develops. The same as in euro dollar. Always happens normally after big move the next day. If you don't have a follow up in the next day, now we had 2 days of big moves. The third day, or maybe the fourth day, is just a sort of sideways market, but very choppy, very volatile, no clear direction. So it's then the time to stay out of the market, take a deep breath, and evaluate where one would like to trade next. All right. Okie dokie. Now, and what else do we have? We have the Aussie dollar. Again, there got a short signal coming into the market. That was here. On the other side, you can see also the entry. So basically the VR short stop loss is basically all the way back up around 83.60, so basically above this resistance zone, and so far the stop loss proved itself as okay. If you would have taken it too tight, obviously you would have been stopped out. So let's see how the Aussie is going to develop. The overall trend in the Australian dollar is a downtrend, the same as in euro dollar, and the same as in the yen is a downtrend, or dollar yen uptrend. So basically we are positioned in all three cases currently into trend direction. So the only question is, if we get stepped out, that means the market is going to take a deeper correction on the trend. Okay, so we just lean back and wait till the market opens up itself for new signals to go long with a trend or short with a trend, depending on the currency pair. Or if it's a huge correction expected, we might as well do a counter trend trade again, as we've done on Monday. It was pretty obviously that this market has the risk potential, like in dollar yen, was pretty obvious that one of these days he's gonna correct. We didn't know when, but we just lucky at that moment that the market just turned there. You can see this again, and we just used our approach, our system, to get into the market with dollar yen, and we can do this obviously with every market, and use that system and strategy and the tactical approach to move into that market, and then we have to see how it's going to go. So position wise, I think we should be happy with the small positions, leave them on and see tomorrow how they run. On tonight session, I'm not quite sure whether they're going to be active tonight, but we have here our counter trend line, and the overall trend in the New Zealand dollar. That's what we're looking at. Let's look at the weekly chart. We can see it's very strongly down, and we found very good support. And we have also here very, very good support. We had here once also support. Now we get two very strong support lines here and there. Now the core question is, if we have Mr. Wheeler tonight, as I mentioned in the other session just now ago, being very bearish on his currency, in other words, lots of intervention bearish talk. If that is gonna happen, and maybe if he just for whatever reason reduces the interest rates, which no one expects at the moment, to 3.25% from 3.5, then we might have to have a sell-off in the Kiwi. And well, before we're gonna position ourselves, because it's gonna be very choppy beforehand and during that, we need to have a clear system still and confirm the break in the hourly chart of this line. And you can see here, that's why we use normally a second candle, that this was a false break. One went in, and the other one, the second one, which you always look at, did not close under the trend line when closed over, so this was not a right way to go into the market. And since then, the market is above this trend line. So what we like to see is basically a close below and more market closes and a second candle close below it as confirmation, and then that would be a short signal basically to go short. Now if this already happens this afternoon, I will obviously place the trade. If it doesn't, it doesn't. Mr. Wheeler is going to speak at 8 o'clock p.m. GMT, and there we can see whether the market is going to be ready for it, and it might be just a sell-off. Then we have to wait for rebounds to basically go in, but we can look at this then tomorrow what happens, and we will discuss this at length. Well, thanks very much for your attention. I wish you a pleasant afternoon, and we see tomorrow how the market's going to develop and how our positions developed, and whether dollar yen is going to extend its correction and whether we're going to go into that one again, or whether the market basically just keeps on going sideways. And well, let's take care, and you take care, and we shall see. Bye bye for now.